Over the last couple days, I've been telling you all to watch very closely what happened in yesterday's FOMC meeting because I told you it would be extremely important for determining what the future of crypto could look like, at least for the next few months. It's going to tell us what we need to be on the lookout for, maybe what we should even be looking at, what we should be expecting, and possibly even as much as what we should be doing right now. And I told you all that after that meeting, I would give you an update of exactly what I'm thinking and how I'm feeling about the crypto market now. Well, now that we have seen the meeting happen, I wanted to kind of make that video for you. You know, in yesterday's FOMC meeting, we saw Jerome Powell come out and basically do exactly what we expected. He didn't raise rates, he didn't cut rates, they didn't really change their course or direction whenever it comes to quantitative easing or tightening, and so quite simply, it was about what we expected. When he talked about the economy, he did seem rather neutral, he didn't seem like it was amazing, he didn't seem like it was bad, and so because of all of these things, with a rather expected meeting and neutral meeting, we are seeing the market somewhat in a rather neutral place. Now, for the most part, the market is rather green today, but if you do look at weekly performances and 5-day performances, crypto's basically in the same place that it's been for a couple weeks at this point. And so now that we did get this rather neutral Fed meeting, I want to kind of tell you the good news and the bad news kind of as a result of what we got from that meeting yesterday and what I'm doing in this crypto market now. And so I know this was a bit of a longer intro, but I did want to lay the landscape, lay the foundation for this video for you. And so with that in mind, let's get into it. Now, first and foremost, let's do the good news first. Okay, let's do the good news first. Because like I said, as a result of what Jerome Powell said, there's good news and there's bad news. Now, the good news is that, again, it came in what we expected. What we expected was that the economy was in a pretty okay place, but inflation was somewhat sticky. And so there's a bit of a balance in between those two things. And quite frankly, I almost think to some degree that crypto can benefit from that balance. You know, when the economy is in a fantastic place, like a really, really, really good place, right? Although there is a lot of benefit for crypto because liquidity can be injected in, and of course, things are in a good spot, you start to understand that you're getting towards the top of a cycle, right? Generally speaking, from an economic perspective, when the economy is in a very good place, you only have a limited time where it can be in a very good place. Oftentimes, it stays in these little neutral zones for much longer periods of time than it is in a fantastic place. And so what that implies for crypto is that, well, we could still be at the very bottom of this next economic wave. If the economy is going to eventually work itself into a very good place, that means we're not even there yet. And that means that crypto is doing good right now, but it could do even better in the future. Now, in addition to that, on the flip side of that, the fact that inflation is still a little bit high isn't actually a terrible thing for crypto. Now, the reason why I say that is quite simply just because you have to think about it. If we are seeing inflation going up, many investors and institutions are going to look for methods and ways in which that they can get their money out of money, right? Because if you hold the dollar, you know that you are holding a depreciating asset. You're holding something that's losing value every second of every single day. And so oftentimes institutions are going to try to chase their way out of the dollar into other investments, which oftentimes lead to things like stock markets and crypto markets and real estate doing pretty dang on decent during times of inflation. Now, obviously, we're not in a huge time of inflation like we were obviously a couple years ago. And so as a result of that, we're not going to see those huge runaways from the dollar, right? But you are going to start to see people still not just wanting to hold cash. And the weaker the dollar gets, oftentimes, the better it is for crypto assets, stocks, real estate, and things like that. Now, you don't want it to get demolished, right? You don't want the dollar to go to absolute zero because that's not really good for anybody. But you do want it to be a pretty decent balance to where people aren't incentivized to just hold their cash. They don't want to save cash, but obviously it's not getting destroyed to the point where cash is worthless. Do you get what I mean? There's a bit of a middle ground there. And I feel like we're actually in a pretty good balance. Now, with this in mind, what this means for me from a positive perspective, again, because we're on the good news here, is that we could still be very early in the grand scheme of things, right? And what I mean by that is there is still a lot of opportunity in front of us. We still do have time for jobs reports to continue to do what they're doing, for the interest rates that are somewhat constraining the economy enough to keep slowly bringing inflation down. And as this does happen, we of course start to see them maybe lower interest rates eventually in a slow and steady manner. And then obviously as they lower interest rates, that is going to come with cheaper money, and cheaper money oftentimes does find its way into risk on assets, just like crypto. You know, people have this misconception that the best thing for crypto is inflation going up. And although there is a benefit for crypto with inflation going up, what I do believe is that oftentimes throughout history, from what we've been able to kind of analyze, is that it's actually better for crypto to be in an environment in which interest rates are coming down, because it's better not only for institutions, but it trickles its way down to retail investors and altcoins, and the small caps and the mid caps and the major caps. They oftentimes will perform better, not just in crypto, again, even in stocks and even some high risk real estate. They perform better when money is getting cheaper. And so if you're going to look at two sides of the coin, one side of the coin says if inflation is going up, obviously people are going to want to look for a way out of the dollar, and they're going to find their way into crypto, which is somewhat the case, but it's not so much the case because you're now excluding all retail investors. And on the other side of the dollar, you have interest rates coming back down as a result of inflation being managed well. And next thing you know, everybody from the top to the bottom is able to get into something like crypto and other risk on assets. And so, because of all of these things, the good news about this, just to kind of wrap this portion of the video up, is that we're actually in a pretty good spot here in crypto. That there is still a lot of opportunity, that if you're looking for this to be a good year, a generally good year in crypto, right, a bullish year, I think that's very possible still. I think we're still going to be able to see, obviously, some catalysts that are going to pop up. Maybe it's, institutions dealing with altcoins. Maybe it's some sort of presidential legislation that does, or White House administration legislation that comes out that has something to do with crypto that can somehow make it better. Maybe there's some sort of tariffs. Maybe there's anything that happens from a more administration-based perspective, and then also from a crypto perspective, right? You never know what cryptos are going to catch momentum, catch traction, especially if interest rates do start falling. Do we start to see institutions and maybe some of your more mid-cap or mid-range institutions getting into crypto, pushing up prices? All of these things are still possible as a result of the fact that we're at a good balance right now. And so this means that although things are good right now, they could get a lot better, especially if the economy does shift into a bit of a better predicament or situation throughout this year, which I think is very reasonable to assume. So from a good news perspective, things are actually pretty good. Now, obviously, things aren't fantastic, and there is a little bit of bad news that comes along with this. But overall, this does tell me that, hey, the crypto market's in a good spot. We could still see a lot of positivity coming out throughout the year, especially as the economy gets in a better place and we enter into a quantitative easing environment eventually, which I think we will. So overall, hey, not too bad. Now, as I mentioned before, though, there is some bad news. Now, before we do get into the bad news, though, I do want to tell you about today's sponsor of the video, which is AdRise. Now, AdRise is a company that I relate to an absolute ton. This is something that I've told you about here on the channel a absolute ton, is that one of the reasons why I do get a lot of extra alpha and stuff like that here on the channel is because I do own a marketing agency myself. I work with influencers all throughout the world, and one thing that I do know is that AI is very quickly and finally finding its way into the marketing space. And AdRise is a company that capitalizes on that. Not only do they capitalize on that, they are one of the somewhat pioneering companies to really start taking the marketing world by storm, enabling, of course, business owners and companies and crypto projects, like I know a lot of you crypto project owners are, to be able to get your marketing done much more efficiently without needing all of the hassle and the bustle and the craziness that comes along with marketing that I know so well. Now, they go ahead and call themselves the first AI to replace marketing agencies. Now, what they actually do is very, very simple, but it's very dynamic. They go in and, of course, create engaging social media posts. They'll audit your ad campaigns and optimize your website for SEO. These are the three main pillars of marketing. You want to make engaging posts, make sure that your campaigns are working, and make sure that you are optimized. Because if you can do all of these things, you have the highest likelihood of people being able to actually see your company, see your project, and get in and follow you and engage on your Twitter or buy your token or do whatever you're trying to do. And what they do is they integrate these three critical market functions into one powerful solution, which is AdRise. Now, as you can see here, they'll go in and they can allow you to, of course, you can mix great copywriting with intelligent visual design, no garbled AI text like we've seen all over the place with ChatGPT, which is so irritating. It's actually very good stuff. You can go and you can edit the generated images that they create. You can customize them as you want. They lay the foundation for you to build something beautiful on top of, and I think it's actually very strong. Now, as I mentioned before, in addition to that, they'll go in and they'll do their own audits and optimizations to make sure that what you're doing is actually working. And this is what really sets AI-driven marketing agencies apart from real-life marketing agencies, or not real life, but like human ran, is because, quite frankly, it's very difficult for a person to be able to assess these things quickly. Whereas when you have something like AI backing your operation, it makes it much easier for you to be able to go in and do these things, right? And so because of that, being able to get these scores and know what adjustments need to be made very quickly is absolutely fantastic. And that does fall into the audit side as well, right? Gathering all this data and all of these statistics to be able to then build up an image or understanding of what you were trying to do or what you're trying to accomplish, whether that's get more followers or more engagement or more metrics, etc. This is what's going to allow you to get there, especially these two combined, right? Obviously, the imaging and the text, that's all good, but once you do that, this isn't enough. You need to be able to adapt. You need to be able to adjust, and this is what allows you to do it, which is absolutely fantastic. The numbers don't lie on it, though. Obviously, as you can see here, this is consistently growing right now. If you have been watching AdRise recently, you can really see the growth that they've had across all of the different partners in which they have started kind of doing pilot tests and stuff with. I mean, hundreds of millions of totals impressions, over 20,000 satisfied users. I mean, the numbers speak for themselves. And the best part about it is, honestly, it's not even that expensive. A lot of marketing agencies, and maybe even mine, can be rather expensive because there is a huge time commitment whenever it comes from the marketing side. And they go in and they'll do it for $30, $100 a month, or for larger enterprises, you can get custom prices, plans, and upgrades, which can make your life even easier. And so because of that, I thought this was a fantastic platform. I think it's something that makes a ton of sense. You can currently join the waitlist if it is something that's interesting to you. So you can be one of the first users to try it whenever they do go full launch, full live mode. So feel free to go check that out down in the description below. And of course, thank you, AdRise, for sponsoring today's video. Now, pushing a little bit forward, into the bad news. There is a little bit of bad news, okay? Now, the bad news about it is that what they said yesterday implies that things could take a very long time. Okay. And what do I mean by that? Well, Jerome Powell came out and he said, well, we are going to kind of wait and just watch and see what Donald Trump does and see how his policies impact the economy and see what sort of changes they implement to see if we need to do anything, right? If he implements this, well, we don't know how that's going to impact our quantitative tightening or easing. We don't know how that's going to, affect the economy based on the interest rates that we are at right now. And so, of course, according to a couple of different models, the best thing that they can do is just sit back and watch, because if they make a move, then Trump makes a move. Trump's move may amplify their move in a positive or a negative way, and they don't really want to play that game. They don't want to risk the economy. And I will give it to them, even though I harshly disagree with the way that Jerome Powell does things most of the time. I will say they are in a bit of a weird spot. The best thing they can do right now is probably just wait and watch, because Trump is being very kind of like, not aggressive in a bad way, but aggressive in the sense that he has it on his mind that he's going to make changes happen, right? And so knowing that, they don't want to go too fast, too quickly, right? Because too fast is what I meant to say, because at the end of the day, if they do start doing things and then Trump starts making changes, you don't know to what way that's going to impact the economy, right? Maybe they lower interest rates and then Trump goes in and he does something, then it amplifies it so much that inflation starts, climbing again. Then they got to really constrain the market, and everyone hates the Fed for that, right? And so because of that, they're going to kind of sit back, wait, and watch. Now, as a result of sitting back, waiting, and watching, that means that the market is, and the economy is, going to be in a situation in which we may see things kind of carry on like they've been for a while. We've been in what I've called an HMZ for a while, and an HMZ is a high manipulation zone. It's these couple red boxes right here, right? Where you see how we're just kind of going sideways and not a ton is going on. There's reason to believe that, although at some point, right, we may break to the upside or to the downside of this, that we may not get an absolute ton of movement, right? That we may see this market kind of just consolidating and going sideways, very similarly to what we saw, like last year whenever we were in between catalysts, right? In between when we saw the ETFs launch, in between the election, we really didn't see this market do anything because, quite frankly, it was just waiting. And these waiting periods can last months and months and months at a time. I mean, this one was over 200 days. We're not even 100 days into this one, right? And so because of that, although that's not my prediction, because quite frankly, guys, I have no idea what's going to happen. What I know is that this is probably going to take a while, right? And this could take time. And whenever you think about the fact that historically May to July are also very bad months, that means that if we go sideways here until, April or May, and then we go into April or May, it might literally just go on for the majority of this year where we're not seeing a lot happening. And again, I'm not saying that's going to happen, because there are going to be external forces that can push this market in either direction. It is just something you need to be aware of, is that, look, the time is not right now for the entire crypto market to just fly to $200,000. Could it get a pump, right? Could we see some sort of short squeeze and Bitcoin push up to 118K, 120K? Yeah, I think that's reasonable, but you're not going to be seeing a $250,000 Bitcoin unless something huge happens, right? And by something huge, I'm talking like Bitcoin strategic reserve huge, like something along those lines. And that's just, you can't predict that, right? That's just going to happen if it happens. And so what I'm saying is that this boring, annoying, high manipulative period we've been in could very well continue on for a while, especially while we're kind of in between catalysts and in between moments. Just like the Fed is in a wait and watch period, so are many institutions, and obviously so is the crypto market. Although we're seeing some movement up and some movement down, it's not really resulting in a lot of growth. A lot of people said, well, today is super green, right? Today's a fantastic day. And I'm like, sure, absolutely it is, but look at the week, right? Although some cryptos are doing fantastic, the majority of cryptos, even though they're up today, are down on the week. And this is a result of this zone that we're in this period that we're in, where we're going to see things just up and down and up and down, and we're sideways until we get some decisive news, something big. I think there's a decent sized chance that this is the fair value of Bitcoin, right? And the market is still relying on Bitcoin. People think that this market isn't relying on Bitcoin, but quite frankly, Bitcoin dominance has been trending upwards this entire year. And what this means is that Bitcoin is in control of the market. And while Bitcoin is going sideways and not doing much, it's not going to allow the rest of the market to do much. Sure, some cryptos will do well. I mean, look at XCN, right? Look at OM, right? Some of these will do well, but the majority is what I'm talking about. When you look at Total 2, this is what I'm talking about. The fact that nothing's really happening here. And so the bad news that I'm trying to say is that it might take a while. And that's not particularly bad news to me. I don't particularly care. I am willing to be patient and just wait and allow this market to play out. But I know a lot of you are tired of it and you're bored and you're ready for this market to do something. And I do understand that and I do empathize with you. But at the end of the day, you have to understand that crypto oftentimes works in a manner in which you'll see very boring periods for a couple months at a time. Then it runs out of nowhere for a couple weeks. And then the boring period goes back in, or a bad period happens, right? And so it's just the manner of the market. You're going to get the most volatile movements and some of the most boring movements. And it's just how this market plays out. But what I will tell you is that oftentimes, if you just sit back and allow this to happen as it's going to happen, if you just allow this to play out as it's going to play out, look for high value projects, look for projects with good communities, look for ones that are actually building strong utilities and use cases and things like that, unless it's a meme coin like Brett. In that case, it's just a meme coin, right? Like, if you look for high value investments, high quality investments, you just sit and wait, even if the market goes down, even if it goes up. Oftentimes, if you buy, sit, and wait, you will be perfectly fine. So that's what I'm doing. And of course, I will continue to update you all as it does play out. And so with that in mind, that's kind of the update for the day. Look, this is good in the sense that things could still be early. The door of opportunity for this to be a very strong year in terms of just bullish return is there, right? There is the possibility that we do start to see quantitative easing. We do start to see money become cheaper. We start to see liquidity flowing into crypto. We start to see institutions coming back in even more. We start to see retail investors coming back in even more. All of those things are possible, but the bad news is that that might take time and it might take an entire year, right? It might take the whole year for that to really start to build up and happen unless some sort of major catalyst from the White House or from the SEC or something like, or BlackRock or major institution, right? Unless a major catalyst happens, it may take some time and you just got to be okay with it because quite frankly, that's crypto for you. And so with that in mind, I just wanted to give you this quick update today. As I mentioned, I do have some very big news that I am going to be releasing on Saturday that has to do with our school. So make sure that you do stay tuned for that. Don't forget to check out the links in the description below if you do want to start trading today. And I can't wait to see you all in the next one. Peace out, everybody.